The small business regulation is particularly interesting for new founders and self-employed individuals working part-time, and there is a lot of confusion surrounding it simply because there are, for example, two terms involved. On one hand, there is the small business regulation, which is often confused with small business. What also exists are different revenue thresholds that need to be adhered to in some way. And yes, many new founders are uncertain about this, which is why we will go through all these topics step by step in this video that you should know about the small business regulation. First of all, the small business regulation is regulated in Section 19 of the Value Added Tax Act, and that is already the most important thing you need to know. The small business regulation only pertains to value-added tax. Specifically, it states that you do not have to charge value-added tax. This means you do not need to submit a value-added tax advance return, you do not show any value-added tax on your invoices, and you effectively pay 0% value-added tax on your invoices. You can take advantage of these regulations and this simplification if you had revenue below the threshold in the previous year and are expected to remain under the annual revenue threshold in the current year. This means you need to look each year at what revenue you generated last year and what revenue you expect to generate this year. If you are below these thresholds, you can take advantage of the small business regulation and do not have to submit a value-added tax advance return. If you have founded your business this year, then you obviously do not have a previous year, so your revenue for this year applies and the rule applies to you on a pro rata basis. This means you need to look at how many months you have been self-employed this year, and you must reduce this threshold accordingly. For example, if you started on July 1st, if you become self-employed this year, then you will have exactly half a year of self-employment, and the threshold for the small business regulation will apply to you. For many founders, this small business regulation is not particularly relevant due to the relatively low thresholds, because if you want to earn your main livelihood from your self-employment, then admittedly, the annual revenue is not very much. When you generate revenue, you are likely to make even less profit, and it is rather difficult to support your living from that. However, if you start your self-employment part-time, the small business regulation could be a significant bureaucratic relief for you. What is also likely important for you to know is that the small business regulation is not tied to specific legal forms. If you are a sole proprietor or a freelancer, you can certainly take advantage of it, but also, for example, as a GmbH, UG, GbR, or OHG. This is completely independent of the small business regulation because it, as I have already mentioned, only relates to value-added tax, and the value-added tax applies to all legal forms. The term small business is very often confused with small business regulation. In 2021, I keep reading this, and I want to clarify it in this video and also ensure that you do not confuse them, as there is a lot of confusion arising from the mixing of these two terms. The small business regulation, meaning a small business, is governed by the Value Added Tax Act and pertains only to value-added tax. It concerns how you issue your invoices and whether you need to submit a value-added tax advance return. Small business is a term from commercial law, specifically from the Commercial Code, and describes business operators who are not required to register in the commercial register. And I will give you two examples that clearly show that this is absolutely different. For instance, a GmbH. A GmbH cannot be a small business by definition, as a GmbH is always registered in the commercial register. However, a limited liability company, GmbH, can indeed be a small business, provided it is below the revenue thresholds and the managing director of the GmbH decides to be classified as a small business. Another example is freelancers. Freelancers are not commercial traders and therefore are also not small business operators. However, self-employed individuals can still be small business owners if they are below the revenue thresholds. This means that if you are currently researching the topic and also Googling and watching other videos, keep in mind that these are two completely different terms. And if you are now looking for how to write your invoice and so on, please search for small business. Anyone who talks about small businesses in 2001 either confuses the terms or is discussing something completely different. Now let's address the question of how you can apply for the small business regulation. If you are at the beginning of your self-employment, you must first fill out the questionnaire for tax registration in order to register with the tax office. In this questionnaire, you will be asked how much revenue you expect in this year, which is the founding year, and in the following year. This information about revenue is important for a few things, such as the small business regulation. This means that if you enter revenues here that are below these thresholds, you can apply for the small business regulation directly in this questionnaire. But it's also important to know that you can do it later. This means that if you didn't do it at that time, you can still apply for the small business regulation informally later on. Formless means that there is no form you need to fill out. Usually, a letter, email, or sometimes even a phone call is sufficient to essentially reinstate you under the small business regulation, so you do not have to charge value-added tax. However, it also works the other way around, and many people are not aware of this. You do not have to take advantage of it. This means that even if you have low revenues and could actually fall under the small business regulation, you are not required to do so. You are still allowed to charge value-added tax and remit value-added tax. This has a few advantages that exceed the scope of this video, which is why I have created a separate video for it, which you can find here. However, if you choose to actively waive this and say, I would like to handle the entire value-added tax calculation, then you are committing yourself for at least 5 years. You should be aware of this before you make an active decision against it. The biggest impact of the small business regulation is on your accounting. It's relatively obvious. You do not charge value-added tax on your invoices. That is the reason why one could or should take advantage of this regulation at all. Your invoices must not include this item, value-added tax, or you write 0% value-added tax on each invoice and therefore have no value-added tax to remit. It is important that you inform your customers why you are not charging value-added tax, otherwise they will not know whether the invoice is correct or incorrect. Therefore, each of your invoices that you issue as a small business must include a note explaining why this is the case. For example, you write that this invoice was issued in accordance with Section 19 of the Value-Added Tax Act without value-added tax. You can find an example sentence of what that might look like in the video description and simply copy it one-to-one. You do not receive any value-added tax transferred from your customer, and the counterpart to value-added tax is the input tax. When you pay your suppliers, service providers, and your phone contract, etc., there is also value-added tax on those invoices that you need to transfer. And normally, you can claim this value-added tax as input tax in your value-added tax advance returns. I also recorded another video about this entire value-added tax calculation, which you can find linked here if you're more interested. But as a small business owner, you forgo this entire calculation and do not have to carry it out at all. This means you are not required and are not allowed to submit value-added tax advance returns, while others perform this entire calculation and manage their accounting monthly or quarterly. In 2001, you must not and cannot submit a value-added tax advance return and are also not allowed to claim input tax. Now let's address the big question. When is it actually worthwhile for you? If you have end customers, meaning consumers, or final users as clients, then the small business regulation could be quite interesting for you, as you can offer lower prices than the competition or have a higher margin than the competition, since the competition always has to sell with value-added tax and therefore always has to pay taxes. It is important to note that if you already know that your business will grow over time, you will eventually fall out of the small business regulation and will then have to charge value-added tax. Then you will later have to adjust your prices upwards or your margin may decrease. This means that ideally you should consider today whether you will be able to communicate and implement this price adjustment effectively later on. If you have business clients, meaning if you are active in the B2B sector and companies are using your services, then the small business regulation usually makes no sense at all. The reason is simple. If you were to charge value-added tax, then your clients could claim the value-added tax that you charge them in their value-added tax advance return and get it refunded from the tax office. This means that if your clients are businesses, the small business regulation makes no sense in almost all cases. Finally, let's return to the topic of what actually happens when you exceed these revenue thresholds and essentially transition from a small business to a large business. Of course, just a little joke, it's not called big business, but what actually happens when you exceed these thresholds and have to switch from the small business regulation to the regular taxation. And there are these two thresholds: the previous year, running, the year expected. Yes, it's easy. To explain, you simply look at the revenue from the previous year and then you are either above or below the threshold. There is sometimes confusion regarding the revenue for the current year because the law states it is expected to be below a certain threshold, which confuses many people. It is very important here that you know this is only about your estimation. What do you expect, or what did you expect at the beginning of this year in terms of revenue? This applies for the entire year. This means that you are either a small business under the small business regulation for a full year or not a small business for a full year, if the year performs significantly better than you expect. For example, if you assume that you will generate revenue this year and it goes exceptionally well, you do not suddenly have to switch in June, July, or August and start charging value-added tax mid-year. Instead, it really comes down to what you thought at the beginning of the year regarding the revenue you would make, and that applies for the entire year. However, when you start generating revenue, you will of course be subject to the regulations from the first day of the following year on January 1st. You will of course have to charge value-added tax from then on because you need to look at the previous year and that must be below the threshold. Otherwise, it would be significantly above. That's actually how you look at it, and my practical experience is that the tax office is also very tolerant regarding these thresholds. I have experienced this 2 or 3 times where the tax office really did inquire. They rarely ask about this, but when they do, it is sufficient to explain how you estimated your revenue at the beginning of the year and how you assumed you would stay below the threshold. In practice, I have never encountered any problems with this. The only problem that can arise is if you do your accounting a bit too late. That means if accounting is not your best friend and you do your accounting 6 months or a year later for this year. To give you an example, let's say it's now June 2021 and you are just now sitting down to do your accounting for last year, and now you only realize that you unexpectedly made more revenue last year because, for example, you received something, and now you find yourself in a situation where you would actually no longer be considered a small business under the small business regulation since January 1st of this year. This means you have to correct all invoices between January 1st and now in June. This is really frustrating because you only have 2 options for how you can resolve this. First, you call all your customers and apologize for being too foolish to issue your invoices correctly, and you ask them if they can transfer the value-added tax to you again. The second option, because this is obviously a bad, foolish situation, would be for you to take your gross amount, meaning that you now consider your invoice total as a gross amount and pay the value-added tax from that. This is also incredibly frustrating because you suddenly have to pay 7 or 19% value-added tax on something for which you previously had a calculation, and the money you thought you had earned suddenly goes to the tax office. This means that this is also extremely unfavorable. Therefore, I recommend that if you are a small business owner, you simply calculate your revenues for the year every year around November or December. Just briefly, where are you actually to know how you need to act starting from January 1st? Next year's behavior and whether you are still a small business. I hope this short video was able to help you a little and answer your question. If you have any further questions on the topic, please leave us a comment under this video. Otherwise, you can also subscribe to our channel. You can do that here. We have also recorded more videos, which you can find, for example, here or here.